very fast Be Smart Facebook Live this year of 2022. So happy New Year, everybody. We are so glad you're joining us this afternoon as we eat this plate of wisdom. We are passionate about changing how you run your businesses for efficiency to ensure that your profits are maximized. Now, today we are looking at delivering more with less. What are these tips to manage your business expenses? Now, as a business entrepreneur and manager of your business, you're battling between very erratic market changes and what is happening with our economic changes, where COVID has actually affected how we do our business and the cost of doing the business. Yet, the financial resources remain strained. So how do we draw the line between what I must use to be able to get what I want to get for my business? How do I stay on top of my financials so that I'm ensuring that I'm running a good business? How do I prudently manage my business and other related expenses to ensure profitability? How do I manage the balance between acquiring, expending, and saving finances for my business? This, I'm certain, has been very, very worrying for most of you. And so this afternoon, we are very, very pleased to have with us Mr. Steve Mboro. Steve Mboro is our head of finance. Let me tell you about Steve. He is qualified to speak about this topic because he is a BCom in financing major and has CPA. He is an experienced financial strategist and is passionate about cost. When you talk about cost and management of cost, you touch Steve's heart. Steve, karibu sana.
Thank you very much, Anastasia, and good afternoon to you. And good afternoon to all our listeners who are on board this afternoon. Of course, it's a very exciting topic to discuss, and the timing is very good as we are starting the year. Because more often than not, as business people and as individuals, we tend to focus more on what is getting to our pocket and what we are generating as business, that is revenue. And we forget about our expenses, which are very critical to running our business. So it's a very exciting topic to discuss this afternoon.
Fantastic. Asante sana. So we will get into it, Steve. And perhaps you might want to define for us what is actually considered as proper business expenses and how do we differentiate that with other expenses?
When we talk about expenses, these are the costs that we are incurring on a day-to-day basis when you're running our business. So for us to generate that revenue, we have to incur some costs for us to do that. So some of these costs, there are various categories that expenses are categorized into. Maybe just to name a few. One of the broad categories that we have what we call capital expenditure. And in that, we have also revenue expenditure. Capital expenditure are expenses that we incur for assets that are helping you generate revenue. For instance, when you buy a car that is helping you to run your errands or deliver goods from point A to point B, that is regarded as a capital expenditure. And for that, then the cost does not go to your P&L as the total cost. For instance, you're supposed just to do the depreciation for that. The revenue expenditure are the costs that, of course, you are expending on a daily basis to generate revenue. So as a business, as an entrepreneur, it's important to categorize that and see what in your business comes in as a capital expenditure and what comes in as a revenue expenditure. Also, another category you can go in and categorize as a fixed cost and variable cost. In most business, fixed cost is a cost that is not changing, irrespective of the number of production you're making in a month. For instance, something like rent, where you are supposed to pay a fixed amount every month, irrespective of the number of sales that you make within that month, that would come in as a fixed cost. So as a businessman, as an entrepreneur, you need to look at your business and see how much is your fixed cost and plan around that, because that cost will remain whether regardless of the number of sales that you make within that month. Also, the other category would be variable cost. These are costs that are related based on the number of units that you sell maybe within a month or a year. So for instance, assuming you are paying a commission to your sales team, that would be a very good example of a variable cost, because it will be based on the number of units that you have sold within that year. Other categorization will be based on of course, the sector that you are in. When you go to, for instance, manufacturing sector, there is what they call direct cost and indirect cost. Direct cost is a cost that you can relate to a unit of production. For instance, how many in terms of manpower, in terms of hours you have used to produce a certain unit. Indirect cost is a cost that, for instance, length that you are not able to tie to a certain number of production. So those are type of the categorization that we have when it comes to expenses. Of course, as a businessman, you need to separate what is a business expense and what is a personal expense. Because even in terms of our Kenyan's law, when taxman come, you are not required to put a personal expense into your business expense. For instance, an example would be even as simple as airtime. You need to separate even the airtime that you put into a personal phone. Is it to generate business and that would come in as a business expense? Or is it for your personal use? If then you put that as a business expense, of course, you have a challenge with the taxman. So those are some of the categorization that would have as expenses.
Thank you, Steve. What I'm getting is that the cost to the business should be linked to revenue generation, so that for it to qualify to be a business cost. That's a very nice way of putting it. So now that we know what is a business cost, what would we do as a business entrepreneur to manage the expenses better?
As a businessman, it's very important to have a budget because a budget will act as a plan on how much will you spend in terms of expenses and how much are you generating in terms of revenue. There's a quote says that says that a budget tells you're telling your money where to go instead of wondering at the end of the period, where did my money go? So it's very important to have a budget, and also in terms of tracking and monitoring that budget is very key for you to look to keep monitoring and trying to find out where am I spending my money on. Also, it's act as a planner, because we keep saying that if you don't plan, you plan to fail. So the budget also act as a planner. Of course, it's also important to track your costs on a daily or on a monthly basis and have some trend. And those trends will help you, of course, in terms of projections and planning for the next month or the next quarter. How much should I spend my money on? The other thing is about cash flow management. How am I managing my money? What is going into what? So also that comes in, and as an entrepreneur or a businessman, you need to have that to manage your business well.
I hear you talking about tracking expenses. What would be some of the ways that we can be able to track these expenses?
Some of the ways are just as simple as having a bank account, because as a businessman, you don't want to be dealing with a lot of cash, and at the end of the day, you don't have a record of where did my money go. So it's important at least to formalize your business and at least have a bank account where all your transactions are going through that. Of course, the other thing that you can do is have a payment voucher where you are also putting your record down. Because the other thing that is important as a businessman, when the taxman comes, he will be required to provide those records. So as an entrepreneur, it's important that you record that, and that can one of the way is to have a payment voucher. The other thing is to have a computerized system, which is and nowadays they are there, which are not so expensive. You can have a simple system that you are also able to manage your sales, your expenses from just a simple system. If you're not able to afford a system, you cannot actually even do this from an Excel worksheet. Where you're able to track and keep record about your expenses and your revenue for your business.
Thank you, Steve. I like it that you're making it very easy for us. So it means we can go as high as having the computerized one to a normal Excel to your normal book of record keeping for you to be able to track. I think that is very relatable. Now, we've been able to know what it is, we are tracking it. How often would we come back to it and review it? And what format of reviews would this be looking like?
Of course, the review can actually even be on a daily basis. It's important to see how much am I spending and how much am I generating as revenue. Because at the end of the day, as a businessman, as an entrepreneur, you want to look at the bottom line and see how much am I making from this business. So it's important to track on a daily basis and see how is my business performing. Some of these recommendations that you're saying is that if you could have maybe a simple tracker, a simple system that can help you give those reports and those patterns about your spending, that can be very important in your business. And this happens to any business, including a mama boga who is running a kiosk. Because on a daily basis, he knows how many crates of tomatoes I'm selling on a daily basis, how much am I generating from that, how much is the cost of even bringing that crate from the market to where my business is. So those are just simple things that we need to do and which are very key and critical to our business.
Fantastic. Now, Steve, post-COVID, everybody is just talking about cost cutting, including even in the homes away from the businesses. And so we wonder, how lean can you go in terms of your cost cutting and you still don't affect your business? How do you balance that out?
Of course, when it's come to expenses, we have seen there are some expenses that are fixed. There are some that are variable. So as a businessman, we need to look at how much is my fixed cost, how much is variable cost, and see how to balance that. But during the COVID period, we have learned that things can change and nothing is static. And change may come even more often than you had planned for. So it's important that you keep prepared to adapt to the changes. But in terms of cost to income ratio, and this is what cost to income ratio mean, that you are looking at your top line and how much money are you generating, and out of how much you are generating, how much is it going to your expenses. For instance, for argument's sake, assuming that you are generating 50,000 in a month, and your expenses is 70,000, then it means you are in a business that you are not generating much profit from that, and you may need to look at how your revenue you are generating or how your sales are coming in. So the most recommended is 50% when it's come to cost to income ratio, where out of what you are generating as revenue, you're only spending 50% of that. But the lower that ratio, the better. So if you're able to spend 20% out of what you're generating as revenue, so it means your business is doing very well. But of course, you also need to look at where your business is at, so that you don't open a business today and you're only making your cost to income ratio is 80 and you want to close your business immediately. You also have to consider that, so that you also give your business time to adapt to the environment, and also enough time to have created awareness, customers know your business and all that. So it's also depend at what growth stage your business is. So that is also very important.
Somebody is asking, we are talking about adapting, and everybody is told adapt to this. Do expenses adapt, and how would we adapt our expenses?
Yeah, like during this time of COVID, we have seen institutions whereby organizations that have adopted to technology, and through that they have managed to remain afloat and actually reduce the cost. We have seen even some hotel closing, but other hotels they were delivering foods to their customers, and that was enabled through the adopting to technology. So we can still our expenses can still change due to coming up with new innovative way. For instance, maybe it's a process issue where through the process there's a lot of ineffectiveness. And through changing that process, you're able to achieve efficiency and able to do the same task more better and save cost. For instance, in a situation whereby you are spending 10 million for marketing, and you can achieve that through online. So it means that through technology, you are reaching more people and spending less and creating more awareness through that. So it's just a matter of coming up with ways on how you can innovate through the expenses.
Somebody is asking, Steve, all the things you're saying sound very, very nice and they sound very doable. What would you tell somebody who doesn't have the accounting competencies to be able to deliver the same expense management as anybody else?
Some of the things that we talked about is you need to have a plan. And in this case, we are talking of even a simple budget that will guide you on a day-to-day basis, and you're able to track your expenses through that. What you're saying is that, for instance, for argument's sake, let's talk about marketing expenses. I was supposed to pay this, I paid this. You're able also to look at these activities that you're doing, how much revenue are they generating for you? So, of course, having a budget in place is very key. And also, we have talked about a tracker. Of course, you can have a separate tracker or you can even track through the budget. But it's important that you track on a daily basis because you are able to know when things are going wrong in good time, so that at least you're not wondering at the end of the month. So if you're able to track this and review more often, for you to make informed decision and you study the trends of your expenses. So it means now you will understand your business more and you're able to make more important decision regarding your business.
Great. Somebody's concerned here because you had said you are matching revenues to the expenses. So somebody is asking, how do we balance between marketing costs that need to be expended before the return on investment can be accrued?
Yeah, that's a good question. And when you are talking about marketing expenses, you need to look at the activities that you have planned to conduct within that period. And of course, for marketing, there are activities that you are doing for brand awareness and to create awareness and to increase your brand visibility. So you need to separate that with the activities that you're doing that may be targeted to generate direct business and come up with measures. How will I measure this activity at the end of the period to know whether it was successful or not? Because at the end of the day, you are not just doing an activity. There is a targeted outcome of that activity. So it's important to have that in mind that this activity I'm doing and I'm reviewing this within this period and what will be the outcome. And actually the outcome will help you even in future planning, future activity, because what has worked before, chances are even in future, it can work for you. So it's important to do that. But of course, then you need also to look at your revenue and balance against the expenses, because at the end of the day, whatever you are making is what goes to your pocket. This is your revenue, less your expenses is what going to your pocket. So of course you need to look at that and say, is this activity making sense for me now? Or is something that I can do within in the next 3 months? So it's very important as a businessman to know what expense is important for me now versus what can I spend, can I push it to the next 3 months? And that also comes in your budget in terms of planning.
I like that you think what is very important for now and what can wait for later.
Yeah.
Somebody else called Mwangi. Mwangi is asking, can I pay for my business expenses from my personal account?
Yeah, you can do that, but of course, then you will be required to refund that from your personal expenses. You'll be required to refund that, the business to refund that to you, because we need to separate your personal and the business, because the business should be able to handle its own expenses, not unless you are bringing it as a rending. You are rending this to the business, and the business will be required to return this to you in future. That's the only way you'll be able to know whether the business is making profit or not. Otherwise, if you keep spending from personal pocket for the business, then you may not be able to know whether the business, you need to continue with the business or not. So it's important to separate the two. And also, if there's any borrowing that you have made from the business, and any borrowing the business has made from you, is very important to separate the two. And that should be recorded as that, so that even for monitoring and also for the taxman, because you are supposed to keep them separate. So you don't want to get into issues with the taxman that you are spending from the business for your personal expenses, or the business you are not able to account for the expenses.
I'll take you back to the 50% advice you were giving us. Somebody is asking, is there a risk that sometimes you can cut so much cost and perhaps come below this 50% that it compromises on the quality of your output?
Yeah, of course, the risk is there. And the 50% that is being recommended. Of course, I talked about where your business is, because looking at a business that has all the system is in place, they're enjoying in terms of efficiency. Of course, you need to understand where your business is and how much are you spending, and looking at the expenses, see how much am I able to reduce, of course, without affecting the quality of your product. So, of course, I recommended 50%, but you don't want to reduce and then affect the quality of the product, and then you no longer have customer. So it's something to look at, and this is on a business-to-business cases. It's not, you can't put it under one bracket. It's a business-to-business case. Look at your business where it is. How much are you spending in terms of expenses? And how much is that ratio in terms of revenue? And now, how much am I able to reduce? Of course, you can't, if you're spending 80%, you can't go down to 50% all at once. Mm-hmm. You may have smaller targets that for this month, I'm targeting 5%. Within Q2 or within 6 months, I'm targeting 10%. And with that, at the end of the period, you'll have achieved your target. So it's an issue of making small steps, but of course, they will add up to what we are talking about.
Steve, before we let you go, somebody is asking, how do we improve our cash flow? That's a nice one.
Of course, cash flow, it means the money that you're getting in versus the money that is going out. Of course, when you talk of money that is coming in, the issue of debtors comes in there. How well are you managing your debtors, and how well in terms of repayments? How much are you expecting, for instance, within this month? and how much is it being repaid. So the issue of debtors is key there. So you need to look at how are your debtors repaying you, and what do you need to do there at least to make sure that you increase in terms of that. And then the other thing to look at is expenses and how much is going to the loans that you have borrowed. So one thing that comes in is that what expenses can I push forward and I don't need to pay now? And also in terms of my arrangement with my suppliers, what agreement do I have with my suppliers? Do I have to pay everything immediately? Or have we agreed on a payment term where maybe I'm paying within 30 days? And by the time now I'm getting into payments, I've already have 30 days to plan for it. So I think those are some of the critical things that comes in there when we talk about your cash flow management.
I think, Steve, this has been very good, and we might need to call you back because time is not on our side, because there's some issues coming up that we'll need to tackle coming up as the tax man. We might want to look directly at the tax obligations of an expenditure, and then this question of how do we grow? When do we agree to now increase our expenditure in an attempt to grow your business? Finally, allow me to just ask you this. In terms of procurement, because cost and procurement go hand in hand, maybe you can give us some little advice on procurement as we close.
Of course, on procurement is important as an entrepreneur and business people that you have a procurement process in place. In institution, they are called procurement policy that details the process, how well, what can be procured, what's the process. This will help you in terms of making sure that you are not even getting goods at high cost than what you're supposed to have. The other thing, and the procurement policies also require you to have pre-qualified suppliers that you can work with. Assuming you have a supplier that I'm buying goods on a monthly basis, of course, these suppliers will give me at a better rate than go out there looking for any other supplier on a day-to-day basis. So it's important as a business to have a policy or a process that is guiding the procurement. Of course, we mentioned that we need to procure what we need now. If there's something that the business does not need now and will need in the next 6 months, that can wait, and you procure that when the business need that. Of course, there's also benefit that comes in when you're buying things in bulk. So you also, as a business, also need to look at that. So whatever I need now or within 3 months, can I buy it in bulk and benefit from the large economy of scale? So it's something that you also need to look into as a business person.
Very eye-opening, very educative. Thank you very much, Steve. Your parting shot?
My parting shot is related to what we have learned from COVID-19, where in business, we have seen how if we are not adapting to changes, what it can do to us, because we have seen business closing. So as business people, as entrepreneur, we need to be very much prepared to adopt to changes and come up with an innovative way on how should we be running our business. One of the things that has come in is on the technology. Like now we are able to handle meeting on Zoom and still transact our business. Previously, Zoom was not a thing of the day, but today, everybody, if you want to learn a quick meeting, you can still learn it when you are still at home. So it speaks to as businessman, as an entrepreneur, how is important to quickly adapt to change and come up with innovative ways on how to keep revolving around that.
Thank you very, very much, Steve. Now that brings us to the end of our BSmart Facebook Live session this afternoon. I want to thank everybody for being attentive and for attending this. We are available on all our pages: feel free to inbox us, call us, our numbers are available, and we'll be able to discuss these expenses about your particular business. Now, Springboard Capital is passionate about lending to your needs. We are passionate about teaching you how to grow your business and make it even better and to run it efficiently. We are available to lend for you to be able to meet your expense needs so that you can be able to grow. We thank you for joining us today. Springboard Capital, the lending hand. Thank you.